Is the Fed done hiking? Let's jump straight into it. So here's you can watch you can look at this on my Twitter, right? Shelter inflation is finally rolling over. I think the Fed is done hiking. Pretty sure they're done hiking here in September, okay? And that could change, but think about this. Shelter inflation rolling over. Finally, we haven't had that for a while, right? The housing market is weakening. You got the housing market weakening now. We're going to go over that macroeconomic data in a second. Jobs growth falling. Okay, that's been falling. Unemployment jumped 300 basis points from 3.5 to 3.8. Typically, when you get about 400 basis points of move, so it'd be 3.9, the Fed does pause or cuts. Maybe they don't cut in these circumstances, but it is putting pressure on them. And I think this goes higher. I think this is putting pressure on the Fed to hold here. So I think unemployment goes higher, right? The spike in oil. Now, here's the big one that everybody's concerned with, right? The spike in oil is not driven by rampant demand. Okay, it is not driven by demand. So people are expecting, okay, this oil demand, they're going to respond negative, and we're going to listen to what the Fed says tomorrow when I live stream it about oil, what they say about those gasoline prices, right? But it's not driven by supply. It's not driven by demand. It's driven by supply cuts. Okay, hiking cannot change that. The hikes do nothing. The Fed has no control there, right? The spike in gasoline prices actually might act as a tax on the consumer, right? A tax on the consumer. And this will further tighten financial conditions, which is exactly what the Fed wants. So, do they want inflation to go up? No. But we do know they're focused on core. And the whole theory is that for every 10% move in oil prices to the upside, core, we're looking at gas here, core moves up 300ths, right? Headline moves up 0.3%, and headline and core moves up 3. So it's not a big input. It could keep things a little more sticky, but we know housing's coming over. We know shelters rolling over. We know car prices used and new car prices are falling over. We know the economy is starting to weaken here, signaled by the retailers in certain areas, right? Prices are rolling over as far as disinflationary, right? They're not in deflation, they're not going negative, but it is disinflation. Nat gas remains down 70%. That's also going to be a cushion for inflation because energy prices are both nat gas and mostly in services, and then oil prices. So yeah, oil surges up, but nat gas inputs to a lot of the services, electricity, right? And that's still down 70%. The United Auto Workers strike may actually result in lower growth and higher unemployment going forward. So what we're looking at here is that the Fed should be pausing. Okay, we should actually see the Fed pause here. That's more likely the scenario tomorrow. The market is pricing in 100%, pretty much 99%, that the Fed pauses. And the real question going forward, which we're going to look at, is, okay, what about the next print? Right? What about the next print? And before we even get to that, let's look at the housing market here. Let's take a look at the housing market, right? The housing market is starting to wobble. Let's take a look at this. So housing market is starting to wobble. Home builder sentiment rolling over. See if I can zoom in here. Come on, there we go. Home builder sentiment rolling over. And we haven't seen this, right, for a while. It's been up for a while. It's been up for 6 months. So it's starting to roll over, tighter rates. Okay, we saw the lowest levels in 2 years when it comes to the United States housing start. So contracts, construction builds off of contracts, those are negative, worse than 2 years. On the month over month side. Well, if you look on the year over year side for housing, which is a little more lagging let's keep it this way. The year over year data shows a new low. So housing starts are rolling. The housing market is not just frozen. Now it's starting to tip over to negative, right? It's starting to tip negative a little bit, probably for single family homes. So when it comes to multifamilies, those are getting built. We're seeing multifamily apartments actually go up. And this is probably why building permits are doing the opposite. Building permits are making new highs. Building permits are turning up. So these are permits to build because I think, there's a secular move into, non-interest rate housing, which is going to be apartments, right? So you're seeing that happen. The housing market is still frozen. The building permits lead the housing starts. And so the housing market, as far as this week, looking at the data, is weakening, right? That's what we're seeing. The housing market starting to weaken. What else do we have here? Oh, we also got some other. So the what is this? Nationwide, 60,000 home purchase agreements were canceled in August. That's insane. 60,000 agreements canceled in August, which equals 15.7% of homes that went under contract this month. This is from Redfin. So what you're seeing is that cancellations are spiking when it comes to purchases, like following through with your contracts. Rates are too high, things are starting to slow down, the consumer's starting to feel it. At least in the housing market, real estate, this probably has a longer while to fall. So the Fed is keeping this in mind. The Fed is taking a look at this data and saying, okay, yes, gasoline is up, but all the core stuff is falling over. All the economy is starting to slow, even though GDP is still up, still positive. It got revised down last week. We saw Atlanta GDP got revised down last week. And now we're getting more data. They're data dependent. Remember that the Fed is, in fact, data dependent. Now, here's the other key part, right? And I'm gonna, so you can read this, kind of what I wrote earlier. The September pause is pretty much priced in. The S&P, right? The September pause is priced in. We already know that, right? There's no surprises here for September. So what you'll probably see tomorrow, which I'm anticipating, I could be wrong, is that there's a sell-off into the news. Into the Fed meeting, the market goes negative, right? Market goes negative, and we're going to look at the technicals in a second here. I think the market goes negative early in the session and then recovers when the Fed actually holds. If they do pause, if you meet expectations, the Fed the market does recover. But then the market's going to say, okay, we got what we wanted. But next, right? What's not priced in yet completely is the November hold, right? What about November? Because they come back before the next inflation print, right? They're going to have to make two decisions. Tomorrow, I'm sorry, not tomorrow. They make a decision and then they come back in October. There's no October meeting, right? So they come back in November to make another decision. We have another inflation report. Well, CPI is probably going higher because gas is exploding. And this is what we're exploding at September, which means October, the reading is going to be for this month, which CPI should be probably up to 4%, possibly. Who knows? We don't know. We're going to keep track of that, but we do know CPI headline is going to go up. So the question is, has the market decided? Does the market really have certainty about what's going to happen in the next inflation print? Probably not. So it wants to know, okay, that November, are you going to hold in November, right? What is the possibility to that? And who knows? I don't know. We'll see what the Fed says tomorrow. We'll pay attention to the commentary. So what you want to look for tomorrow, at least, is, or I think is going to happen, is if the Fed does pause initially, I think what you get is the dollar. Look at the dollar. So first off, the dollar, big macro force here, is showing exhaustion. It's been in this overbought territory, right? It's starting to roll over. This will be a tailwind for risk assets if it does roll over after the I'm just assuming we do pause, right? If they hike, I mean, the market's going lower. If they hike, the dollar might break out. If they hike, yields might go up. If they hike, we're going to retest the bear trend, right? The bull market trend, that's for sure. But we're assuming that they do pause and they're going to be data dependent going forward. And if that's the case, right, the dollar might actually roll over here. There's a lot of bearish divergence. We're seeing the RSI, tip lower while price is going up. So the dollar is exhausted. It might roll over, be a headwind. Also, 2-year yields, which are the most correlated or tied to the Fed funds rate, those are at a major resistance, right? Maybe we stick around here a little longer, but they're not going higher. And with the Treasury issuance coming out, with the RRP coming in, we're going to do Q&A, don't worry. With the Q&A, with the RRP coming in, sucking up the liquidity, we talked about this yesterday. I think 2-year yields are going to be stuck here, right, for a while. I think so. We want to watch the reaction between the dollar tomorrow when the Fed speaks and kind of focus on those gasoline prices. That's going to be the main thing that I'm looking for going into tomorrow. We are going to do some Q&A and also look at some technicals that are setting up for, there's some really good technical setting up. AMD, very good setup there on AMD. And then we'll do the Q&A. So let's see, really good questions. By the way, your questions usually will get lost in the TikTok feed. So if you want to jump over to YouTube so that it sticks on there, it'll be live. You can do that, right? I don't know if there was any other questions. They probably got lost in the feed. So I'm going to go through. Do you mind sharing your educational experience with us? We're not going over that right now. I'm not questioning you. I'm only asking a fair question, FYI. Yeah, probably for credibility, right? credibility purposes, I mean, I would say this, just go, I have a website, right? You can go check me out on the website, link in the description. I have a newsletter, write it every single week. So there's your credibility. I'm not going to go through the whole spiel. There's an interview coming out where I'm talking about how I got started, all that, whatever. Either way, if you want to know that, right? I mean, we're going to get back to the technicals. Don't worry. I just want to answer this question. Go check out the newsletter. Go check out the website. I have a bunch of writings on there. I've been writing about the market, Bitcoin, crypto, Ethereum, macroeconomics, right? Coming out with courses soon, since 2020. So go check it out. There's your answer right there. So anyways, back to it, right? We're going to look at the technicals here. Okay. So again, what could go wrong here? So let's not pretend like there's everything right, right? If the Fed does hike in November, let's say the Fed pauses here. That's what we're expecting. They pause, they stay a little hawkish in their language. They might stay a little hawkish, right? And then they say data dependence, and we have inflation. We know it's going to be higher in September because damn, oil's up. We know it's going to be higher, right? So there's no surprises there. Well, if the Fed does hike in November, another 25 basis point, that's not that big. But the downside is earnings start to get revised lower because gasoline is a tax on the consumer. They're going to pull back to some degree. Student loan repayment, we debunked that. That's not the big deal there. Student loan repayment is not huge. They don't have to pay it till October. We talked about this. Also, debt to income ratios are so high. The debt to disposable income is super low. So credit card debt at all-time highs. Well, guess what? People can pay it off. They still have jobs. So losing jobs, unemployment, that's the issue. If that starts to spike, but I don't really expect it to spike. Maybe it creeps up to 4%. You still have fiscal policy coming in. But the point here is the Fed hikes in November could be a net negative for the market. Earnings get revised lower. Well, S&P earnings lower. Market's going to have to reprice. Lower global liquidity. We keep our eye on liquidity. If liquidity continues to sink, Fed net liquidity, we keep our eye on that. The RRP, right? The RRP facility, if the Fed does hike, that's going to keep that liquidity from coming back into the market and kind of stick over at the Fed. It's still risk-free, right? I doubt that happens. And also, if yields break out, if the dollar breaks out, and we actually get S&P and NASDAQ, the head and shoulders play out, right? The head and shoulders breaks lower. At the same time, you get the overall bull trend from the October lows of last year start to get tested and possibly roll over. That's the downside here. Now, do I think it happens? Not really. Not really. Let's look at the actual technicals so we can see how that might play out. Throw your Q&A over in the comments. Oops. All right, so here we go. I'm looking at MicroStrategy here, but let's go to S&P. Where we at? VIX. VIX also, look at the VIX is still, VIX is still down here, not making a whole lot of noise. I wouldn't be too concerned with that. Put to call ratio. Look at this. If people were so concerned about puts, you can't really see it on here, but look at the put to call ratio starting to trend back down. That's a bull signal in market internals right there. All right. Okay, I'll get to the S&P. Hold your horses. 442. So again, we dropped the 444 level, which was, you wanted to see 444 hold. That's a level. We'll go ahead and take that level out now. No, we'll keep it there. We'll keep it there because that might be a really good indicator on what happens next for tomorrow. You want to keep your levels there. But we dropped that level. We are picking back up, but we're in a big wedge pattern, right? We're still in this big bullish wedge pattern. This is the bear market trend that was broken. And what you can do is say, okay, well, what about the bull market trend, right? The wedge goes right into the bull market trend. As a matter of fact, I'll make it a little tight. Make sure we're on a log chart. There we go. So we're still trending higher, right? You could have some weakness, all the way through October. That's what the trend shows. This is a model. It's not a promise. It's not going to tell you exactly what happens, but you're really gearing up for a big upside move because the market is anticipating that the Fed is pretty much done here. You're in there, and all the red herrings, all the negativity, growth collapsing. That's really not a viable option here because if just think about this, right? Triple B spreads going nowhere. There's no credit risk, right? VIX going nowhere. It's still low. The market knows. Okay, the market knows, and let me just, you see the uptrend. The market knows if there is weakness, it could just consolidate, right? You still got a long way to go. If we go to 431 SPY, right? But if the market, if growth, let's say gasoline sticks higher, consumers stop spending, growth goes negative. Well, guess what? Bond yields come down. That fuels valuations. Bond yields come down. It's cheaper to fund growth into the future. Okay, the Fed pauses and Fed fund futures into the, Fed fund futures start to price in, start to bring the cuts further down, right? So really you're gonna get expansion if that happens in the big tech. Not everybody, right? IWM, they're stuck, they're not earning, they're gonna stay in trouble. Sorry, I don't know what that is. So you're going to still have, you're going to get an you're going to get expansion on your valuations if growth does slow down. Now you get closer to a cut, right? That's what the market wants, because inflation is going to come down also if growth starts to roll over, right? Earnings estimates go down, GDP goes down, the estimates for GDP go down, and core comes down. Well, the Fed can now get closer to cutting rates. So the market's looking past this. The market already priced in a deep recession in 2022. It already priced it in. So it's looking for the easing going forward. And we know China's weak. So there's not a whole lot of demand for oil to really just sustainably stick up there. It probably does go to oil, right? I was in denial for a while. Now I'm like, you know what? Maybe oil goes to 100. I think it slows down here, and then it possibly revamps back to 100, possibly if those supply side cuts keep coming in. So we'll keep track on that. What else did we get? Yeah, for sure. So yeah, that's what I'm looking at here. Now, let's take a look at again back to the technicals. Back to the technicals. S&P can kind of consolidate here, right? Nothing too crazy. Boom, boom, boom. If the Fed, I think the Fed's going to pause, but let's say the S&P does turn a little bearish, we're still in the uptrend, right? And all it's going to do is try to price in. Okay, let's price in another hike, 25 basis point hike, because oil is elevated, and that's going to seep a little bit in the core. It's not going to be that big of a deal. Well, this is just another buying opportunity. There is no black swan event coming yet. I mean, we don't know, right? But there's there's no big stirring up. If you want to look at banks collapsing because of this liquidity coming down, then we just look at KRE as always, right? Where's KRE? Is it making new lows? Yes, it is. It's falling. So the market might be anticipating more liquidity. The last time KRE rolled over, right, from the level. So here's your level right here. KRE broke to the downside. And this highlight here is the Fed stepping in. This is the Fed pumping liquidity. I mean, you can literally see it on FedNet liquidity. Boom. Look at this white line, right? This is Fed stepping in. Well, what are you seeing? Look at the divergence here. Look at this. Look at this is so clear divergence. This is why we look at the macro. You see KRE rolling over, making new lows, showing weakness, and FedNet liquidity is picking up, right? That bank term funding program is fueling these banks. So I think the market is going to look into this and really just say, okay, well, yeah, the Fed, there's still some headwinds out there, but oil is going to actually slow things down, and higher rates are actually going to crush banks, which is going to cause the Fed to print, to give more cowbell, right? So at the end of the day, you're still going to be higher. And then when we think about the trend, right, kind of what's going on here, I think we said this yesterday. Let's see if I can find it. I think it's right here. Yeah, so economic activity. Here's the other part. Yes, the banks are in trouble. Manufacturing's been in a recession. You're in a rolling recession. You're not in a deep recession, not yet. You need unemployment to really roll over. And this is going to cause the Fed to pause. So we're pretty sure the Fed pauses tomorrow. I mean, the market is pricing it in 99% chance pretty much right now, right? Your downside is global liquidity, right? For risk assets, global liquidity is still stuck at it's at the lows, but it's not moving up yet. So keep your eye there. The other part is that, let's see if I can move this a little bit. There we go. So that's global liquidity, right? KRE, keep your eye on KRE, S&P, QQQ, and the Qs are doing the same thing, right? You're looking at a big wedge. This is really bullish technicals here for the Qs. Very bullish technicals. You see liquidity has been coming down also for the globe, but expect China to keep printing. Country gardens defaulting again. Real estate's a third of their economy, unlike ours, and they keep defaulting. They're going to have to keep printing, right? They might be slower coming out of the, we'll watch their PMIs to see their business activity, their economic activity, but it is slow. So they're going to pump those capital markets. That's going to bring global liquidity up. We know Japan is still printing. We know India is growing the fastest. We know that Europe is almost at the end of their hiking cycle. They're pretty much done. We're pretty much done. And when the slower you get, right, as the economy starts to slow, you get more liquidity coming in. That's the, it's typically the juice that you get squeezed there. So also looking at, these are the cues, right? So taking a look at just what is the macro outlook? Economic activity is starting to recover. If you look at the ISM, PMI indexes, they are recovering. Okay. How about liquidity? Well, global liquidity is down. Reverse repo facility liquidity is up. It's been moving up. This right here in the white. And that is also keeping the Fed's liquidity up too. Also right here. So the Fed liquidity moving up, reverse repo moving up, global liquidity moving down. So we're going to keep our eye on that. But we're at the turn. I think we are at the turn here. You see it in the S&P price action. It's like a rubber band, right? It's like it's like what do you call it? Not a spigot. I can't even think of the term. You're basically, it's like a rubber band. You're pulling back here. This is a wedge pattern, right? You're starting to wedge here. And then if you go to rates are peaking. So if rates have peaked indeed, well, that's it. There's no more downside. And they're pushing the level. Look at 10 years really, really starting to push here. But if they peak, that's it. If the dollar has peaked here and starts to roll over, that rubber band starts to push back on the macro, anyways, the macro forces starts to push markets higher, starts to increase the valuation, and you get that expansion, right? Earnings, on the other hand, have been revised up, but I think there's going to be a couple headwinds here. Maybe the UAW strike slows down earnings, slows down production, and everybody says, oh, that's inflationary. Well, people also are getting laid off, so it's also deflationary. Keep that in mind also, right? So they just want to point out one or the other. I think it's a net nothing, right? Nothing burger. Technical wise, we're still in the uptrend. The adoption cycles are the big parts, right? What are the big adoption cycles here? One of those, and who's going to benefit the most? Well, there's some reports showing that AMD is actually going to outpace NVIDIA. Who knows if it's true? I mean, I'm not a deep chips analyst, but AMD looks great from here. These are the levels for AMD that we've been looking at. And yeah, it's double bottoming here. You're starting to get that confirmation. The RSI is, I mean, you're really starting uh to gain some momentum. The RSI, I know it's low, but it's again, it's like a rubber band, right? It's starting to cock back and getting ready to explode. I think once you get above 103, that could be a nice entry point. If you get the retest of 99.50 or 100, that's a good entry point with your stop below 99.50. If it holds below 99.50, get out. Don't hold it, right? But AMD has a gigantic flag pattern. Like, you don't see this very often. You do not see this kind of consolidation very often at all, right? Next, this is probably a better setup than Tesla, but Tesla has the superior catalyst. Tesla grinding higher on the RSI, right? And when it breaks out, it breaks out. Like last time we were around this level, it looks like the RSI is kind of overbought a little bit. Oh, well, it's at the highs, it's above the middle. But look at Tesla price when the RSI, look at the price of Tesla when the RSI was at the same level, was at 185. Was that oversold? It went up 50%, pretty much over 50% with the RSI here, because it blows off top. It moves, especially it's still in this uptrend. It's going to move. So Tesla's going to be harder to get into, but it looks like you're forming a nice support at 260-ish, 261. There's your support. If it drops that support, get out, right? You don't want to hold under, you really don't want to hold if it can't hold 260.50. I would say 260.50. If it cannot hold above that level, you're out for Tesla. Really good setup there, though. What else do we got? And then the catalyst for crypto. Also, you have some crypto catalysts here, which is tokenization, right? Tokenization is a big catalyst. We're starting to see Bitcoin again. Everybody, oh, Bitcoin's going to crash. All the negative about Bitcoin. Is it really going to crash? I don't think so. I think it's really, a lot of people are negative, but we are coming into the downtrend. So does Bitcoin break out from here? I don't know, but the RSI is picking up, right? This tells you that buying pressure is starting to pick up. The supply is falling. So the supply dynamics, the demand supply dynamics are setting up for a big move to the upside. They're setting up for a move to the upside as this scenario plays out. You're getting a lot of people, a lot of politicians, a lot of regulation, getting closer to the end of their decisions. We know BlackRock is going to buy this. We know a lot of other institutions are going to buy this. And usually it's already priced in. But when it comes to this, I think you really need this is not priced in. Bitcoin is not priced in yet. So you're testing the trend. Bitcoin maybe above 28, 29, you start to take off. Ethereum, same thing. still moving here. This is probably even better, an even better setup here for Ethereum. But the big news here, which we are going to go over at the end of this week, Chainlink is moving up. It's holding that level, right? This is the protocol for tokenization. When you hear the tokenization of all real world assets, the number one protocol for that tokenization is Chainlink, right? CCIP, cross-chain interoperability. We know different banks are using it. The Bank of Australia is using it. I'm going to do a full report on this pretty soon. And this is the token. If you're looking for that 10x, 20x, 30x, this is the token that actually has secular adoption. This is the token that actually has secular adoption. We're literally seeing it from Larry Fink, BlackRock, Citibank, Swift, the biggest messaging system. So you're looking for not a meme coin, Dogecoin, all this other crap. These things are being used. This is the most widely used crypto, and I'm gonna keep saying it, the most widely used crypto in all of crypto. Outside of for the altcoins, they all use crypto, Ethereum, price feeds, connecting public to private blockchains. So Chainlink has a real fundamental catalyst here. And you have big, people don't know the CEO of Google, he went into retirement and he came out of retirement to work as a vice chair for the Chainlink ecosystem. He's working with them. I forgot his name, but I have it in one of my reports. So this has a real fundamental catalyst. I mean, I smell a breakout. I don't know if it's going to break out yet, but I smell we're getting close to crypto moving even before the halvening, making that first move, right? Getting that move out of the bear market first. I think Chainlink runs up to 14, 15 before it consolidates. And then you have to have the macro actually turn in your favor. Mike 77, Bitcoin is a joke. Okay, well, it's a $500 billion joke, I guess. That's what they said about Apple, Amazon, Google, Facebook, Tesla. They still say Tesla's a joke. So you have to prove that. Bring some I would say bring an actual, argument. A joke doesn't really mean anything. You're probably not in it. You probably missed it. A lot of people miss it and they're like, oh, that's a joke. Well, yeah, sure. Apple was a joke too until Warren Buffett got into it. I mean, it's just funny. The biggest what is it? The biggest asset manager in the world is adopting Bitcoin, but it's a joke. Okay. All right. That makes a lot of sense, right? So it doesn't really make any sense. Not really a whole lot of logic there, probably just emotion, as usual. So that's what we're looking at here for the economics. Again, the macro is setting up. The macro is setting up. Oil is up, I know, but most commodities are not. So when we turn to the copper, it's not really moving because China has not reaccelerated, right? The US is recovering because of fiscal policy coming in the fourth quarter, but it's not exploding yet, right? Wheat prices, expect food to go lower. So nat gas still suppressed. I don't think the Fed responds to this, right? I do not think the Fed's going to respond to this. I think we're pretty much in order to see the Fed pause here. And if oil, keeps going higher, then we're going to have to question. We'll see what they say in November. But if oil rolls over from here, I mean, that's it. That's it. And then you watch Fed fund futures to see if the market starts to price in future cuts. So let's go look at Fed fund futures. What is the CME starting to say about Fed fund futures? Yeah, let's see what the market's pricing in going forward. But really, hey, I'll be looking at the Fed meeting tomorrow. I'm going to dissect what Powell is saying, his words, and we are looking for less aggressive language on tightening. We're looking for what he has to say about oil. His tone is important. Is he going to have more dovish, or is he going to have a dovish, or is he going to have a hawkish tone? That is the question. Dovish or hawkish tone. Okay, so turning over to, come on, load. There we go, 99%. So let's look at these futures, right? Oil is the big risk here, but it's not high enough to be a sustainable risk yet. So the market is pricing a 99% chance of a pause. So what we want to do is we want to look over at November. Okay, so we got a whole month. This is all, I mean, it's 70-30, and there's a bigger chance of a pause, I guess, from a month ago. But you want to see this get to above 75%, right? We're not there yet. So the probability of a hike, and this is going to be key. When Powell speaks tomorrow, you want to see the dollar. How does the dollar respond? You want to see how the yields respond, and you want to see how these how the targeted probabilities of you want to see if the probability of November goes up or goes down. That's what you want to keep your eye on. for the market. Other than that, we're still in bullish territory. We're still moving higher, which means that the market's going to sell off to price in unexpected bad news. And if it doesn't happen, it's gonna go right back up. Right? That's how the market moves. So that's what we're anticipating here. Now let's go back to the technicals. Let's do some Q&A. Any questions here? Any comments? Any challenges? Hey, I would love to get a challenge on Bitcoin. If you really have if you want to join, I'll send you a link because people really don't have an argument. They just seeking attention or say what they have to say. Same thing about Tesla, right? Now, Tesla deliveries, though, watch, I'm going to go to my Twitter. Let's put on Tesla here. Tesla deliveries are actually set to be a little weaker. So that's weighing on price for Tesla, which would set up for a good buying opportunity, in my view. Let's see, where are we at? Oh, okay, yeah. So looking at, well, talking about CCIP a little bit. You guys know Citibank actually just released new services, tokenization services. So services to tokenize assets, transfers, deposits. You know how big that? I mean, I am telling you, I'm not saying go buy Chainlink. I'm just saying if you want to see, if you're interested in a crypto that's going to make you money, and that has a real hard fundamental, a solid fundamental thesis behind it, that's happening right in front of your faces. The Bank of who is this? The Bank of Australia? Yeah, the Australian bank is using CCIP to successfully demonstrate cross-chain purchases of tokenized assets, right? I mean, there's so many things going on there. I wanted to find the Tesla stuff. I don't know where it's at, but yeah, Tesla is set to have lower deliveries. And hey, if there's an upside surprise, that's going to be good news, right? That's going to be good news there. See if there's anything new. Cash, equities, bonds. Yeah, cash is coming out of the market a little bit. Short AI service is probably correct move. Shorting AI, blah, blah. All right, I don't really see anything there. So yeah, we're just looking for that. Okay, let me turn to some of these tech names. Let's see what we got going on with the Qs. Go through this. So tech, I expect tech to keep breaking out, right? Technology's still up, Qs are still up. They're probably gonna outperform going forward because the environment we're heading into, right? If growth does decelerate the way a lot of analysts are anticipating, right? The bears, yields come lower. If yields come lower, valuations go up. Tech in yields, long-term yields is how you price tech stocks. So if those come down, tech stocks receive more juice in general. Okay, let's go to IWM. IWM probably, maybe it's a good buying opportunity, but it isn't a bear flag. So, you get like a 70% chance it breaks down, but it really depends on the overall market. I just think it moves sideways for a while because these companies are unprofitable, and they're unprofitable. So they're not, there's some strong support resistance right here at about 180. But other than that, there's not a whole lot of catalyst for small caps. They're unprofitable. They need rates to come down. Dow might be okay here. Dow is consolidating. It looks like it's starting to break the downtrend, but the Dow is basically looking at infrastructure spend going forward, right? Infrastructure spend, all that stuff. I think it's going to stay there. ARK is still in the uptrend, right? Had a pullback, is still in the uptrend. This is going to depend heavily on what Tesla stock does, obviously, and Square. What else are they in? Shopify, stuff like that. We'll take a look at Shopify. Apple holding the trend. Apple is holding this, and this is the breakout that they had. Apple still holding the wedge pattern. This is going to break out again eventually. I mean, there's nothing that's going to stop Apple from carrying the market. It is the bellwether. It is. I think the Apple index. I think Apple's market cap is larger than the small caps, which is really interesting. What do we got? Anything new coming in here? No, I don't think so. Okay, Amazon climbing higher. Well, great buying opportunity for Amazon, pulling into the uptrend. Definitely pulling into the uptrend there. You're solid. Google, take a look at Google. Google is just climbing high. I mean, Google's climbing higher to the highs. Um, good market breadth. Meta, maybe somebody knows something. Meta, ooh, Meta's holding a little higher today. Okay, Meta's holding a little higher today, holding that wedge, that flag pattern. Oh, it's a wedge. I think it's more of a wedge. Holding this wedge. So Meta looks solid. Actually, we could drag this out to about right here. I'm not, I don't really trade Meta at all. I'm not looking at it. More interested in Tesla, but it is setting up. Microsoft kind of looks crappy, right? It looks kind of, it's just Microsoft has ugly price action a lot of times. So you have Microsoft, and I think Microsoft is the only Magnificent Seven stock that's kind of just moving sideways. I mean, Netflix, if you consider it, Magnificent Seven, it's not really moving up either, but it's setting up for a big move in my view. Look at this. Look at this big flag pattern. That's a technical flag pattern right into the uptrend when it comes to Netflix. So you draw that downtrend from the lows, right? Netflix, I mean, it looks like it's breaking it, but I mean, that's a bullish setup right there. That's a pretty bullish setup. Netflix ain't going nowhere unless I'm missing something in the fundamentals of Netflix, right? All right. So again, Tesla, I mean, this thing, when it blows off top, right, it's going to go. You get above 300 to 315. That's it. Going all-time highs pretty quickly. It's all going to be the catalyst, though. Yes, it's in a technical uptrend, but full self-driving, full self FSD licensing is going to be huge. Cybertruck comes out. Is it priced in? Possibly. Maybe it's already priced in. Maybe it does what it did back here. It had that big upside move, pulls back, moves up, makes a lower high, and then makes a new low. I don't think we make a new low, but we could pull back into the trend, right? There's not a reason we couldn't pull back into the trend, come test 241 again, and then move higher. So if you are tight on Tesla, 261, if it holds under that, it's probably going back to 241, right? And it moves quickly. So when it gets down there, it's going to move. Nvidia, on the other hand, man, it's just up so much, but Nvidia, you got to grab it when it's really falling. And it's just not, I mean, what is it down right now? What is Nvidia down? Nvidia's down 13%. So from the highs, I don't know. I'm not interested in Nvidia. I know a lot of people still have to get in there. AMD, on the other hand, great setup for AMD. This is a bullish setup for AMD. The more it spends time down here and just holds this previous level, 100, the juicier it starts to get. I want to wait for the Fed meeting to be over. I want to hear, because I have more confidence that I can digest, that I can see what the market might be thinking and digest the news, but we don't have it yet. I'm not going to front run. I'm not going to front run anything. I'm not going to guesstimate. So I want to see what the Fed says, especially about oil. And you get AMD back above 103. That's going to be interesting there. Zscaler, this is cybersecurity. I'm looking at tech because I think yields might be up there a little bit, but these have higher growth rates than other companies. Zoom, oh man, Zoom's still wedging. I mean, it's still holding higher, but Zoom is still struggling. I'm in Zoom still. I'm still holding Zoom. Still in the uptrend though. We'll see when it blows off top. Looking pretty far out. TSM, wow, TSM semiconductor really struggling here. So that's lost a lot of juice. This has lost a lot of juice. Looks like the semis have lost a lot of juice. Teladoc making new lows. I got out of this trade. Couldn't hold the lows. I'm out of Teladoc. Square, oh my goodness. Square is just collapsing. Well, I guess it's at support, but it doesn't look good for Square. And I think a lot of this is coming from KRE, right? It could be, I don't know, but I think KRE, basically lending, right? Anybody who's dealing with lending services or lending services and all that, and money market funds are destroying these stocks, these fintech stocks, because they're yielding 5.5%, 5% for free, for risk free. So they can't beat the money market funds. They have to offer it on their platform, very competitive. So I think the fintechs are going to struggle. Even SoFi is right back down to where it was. I know it's exciting. Oh, SoFi, it's kind of SoFi might be a little bit of a, what do you call it? A cult stock. I don't know if it's there yet, but rates are, these stocks are very highly sensitive to higher rates, right? But the Fed pause might actually get them to go higher. I don't know. We'll see. Their business literally is around rates. Roku making new lows doesn't look good. Palantir, pulling back. This thing made a huge run. It's just consolidating. Needs to hold $14. Needs to hold 13.50 for sure. Anything close to 13.50, I wouldn't buy above too far above that. Okta pulling back, Team pulling back, Twilio in talks with Microsoft for some AI services, but so far they've been losing a lot of money. Oracle, man, this speaks to the fact that people have no clue what to do. Oracle broke out as an AI play and pulled right back down to support. So these things look ugly. I think Tesla Meta, those things look solid. Apple, I mean, Apple's going to be in there. Open Door, it looks like it's making new lows. MicroStrategy, I would wait on this one. I mean, this is your Bitcoin. If you want to buy, forget Mara and all those. I know it's expensive here, but if you're looking for a big blow off top or a big options play, if you have the capital, MicroStrategy long calls to 2026 are pretty juicy. They're just expensive. So you're waiting for that that crash. I don't know if it's going to happen. You're waiting for a crash. Their business is solid. They own the most Bitcoin. It's not even close. ENPH okay, starting to pull up a little bit. That's very bullish divergence at the lows. This is probably going to blow everybody's mind when this thing starts to move. I think it moves back to 185 pretty quickly. I think it's going to move up pretty quickly. It's just one of those stocks that has tremendous volatility and momentum when it starts to go, especially with the IRA coming in and all the shorts that are piled in there. ENPH and MicroStrategy. Carvana still has that resistance, got rejected over the past couple of days at 56, but it is setting up for a move higher. I'm not interested in Carvana. Don't know the business too well. I don't know what's going to fuel the automotive industry anymore. Coin, same thing as crypto. Adobe still seems to be trending higher. Airbnb, not interested, but Airbnb looks it doesn't look bad. Airbnb does not look bad. PayPal still struggling down here. Salesforce, CRM, it looks like it's struggling down here a little bit too. It's just moving sideways actually, so this is not too bad. Maybe look for the breakout here, but CRM, ooh, let's change that up. There we go. Yeah, a lot of consolidation sideways for Salesforce. Shopify used to be a big mover. Shopify struggling too here. Looks like these guys are just moving sideways. I think really the only tech companies that have catalysts are the Magnificent Seven. Unfortunately, people get pissed off, but they have the best business models. Their revenue growth is not really at risk. They're growing faster than a 5% interest rate. They don't really care, and they're going to have growth no matter what. Netflix looks like they might slow down a little bit because the consumer is going to slow down. Also, who is it? Disney. I know a lot of people look at Disney. See, do we have any short Airbnb? Again, I missed your guys' comment. Jump on YouTube if you don't mind. Comment on there so it can stick. If you want Tesla 268 resistance, short Airbnb. Yeah, I don't really like Airbnb's business model, honestly. I don't think it's gonna last. I could be wrong. Maybe they'll innovate, do some R&D. Disney still falling. I mean, I think it's gonna stock pickers market, and I think it's really Tesla has the best moat here going forward. Still really risky, but has that full self driving's coming. 268 resistance is what he said. Oh, for the day, you talking about intraday? See what it looks like intraday. I haven't even took a look at it. Got back above VWAP. Oh, that might be a good trade there. Let's see if it broke VWAP. If Tesla's back above VWAP. Yeah, this would have been a good entry earlier today. You got the wedge pattern so you got that first initial upside move, which isn't always bullish. You want to see a downside move first typically, and then sold off, but got back above VWAP. Right here would have been nice. You get two supports and it breaks above VWAP, holds the prior level. 265 would have been nice. 266. Tesla, there's buyers coming into Tesla. I don't know who you have a call for tomorrow. Okay, nice. I think one more hike and pause in November. You could be right. That the market really isn't going to like that if that's the case. You get one more hike, it's not anticipating that. Man, you'd make a lot of money if you bet on that. The whole market believes no. What's your theory, Ace? Is it because of oil? You probably missed the beginning of the stream. Is it oil? My guess is Gas prices are the reason why you're leaning towards one more hike, correct? Gasoline prices? Yeah, I'm with the pause. I'm with the pause. I mean, I just gave a whole presentation on it, why the market pauses tomorrow. I think a lot of people see oil going up and they're like, "Oh, the Fed's going to hike because of that." But uh, I mean, listening to the bond market, I don't think it really cares. The stock market doesn't really care because gas does two things. It slows down the consumer. It's like a tax on the consumer, so it's actually bearish going forward. And number two, it's not driven by demand anyway, it's driven by supply. So it's not like you have an inflation problem with gas going higher. It's not consumer driven. It's literally supply driven. So that's not an issue. And it's not like the supply chains are broken. It's literally OPEC, right? Number three, um, number three, energy prices, electricity prices are down because nat gas is down. So you're not really, it's not systemic here, right? If you get over 100, 120, you're gonna have an issue, of course. But right here, I think is okay. Also, that's gonna pump equity earnings, right? That's gonna give you earnings on the people who do have to pay those costs. It's gonna give them earnings. So the energy side, and Tom Lee's been saying this for a while. I didn't really listen. I was like, no, I don't want energy to go higher. He was right. Energy is going higher. So like, who are all the energy plays? They're going up, right? CV, who is it? I can't even think of them. I'm like have a bias against them because I've always been a Tesla guy. So I've been against energy, even though that's not the right state of mind. You got to be able to flip. I'm not dumb though. I know energy can go up, but I've always had a bias against them. I have that feeling. Either way, they're going higher because the setup was really nice. The question is oil? Is it done from here? Is it going to slow down? Is it going to speed up? We'll keep track of that, right? Um, yes, it already reached 90. Yeah, it reached 90, but like I just said, right? There's reasons why, and we'll look at oil because look, it's up. It is a risk. Don't get me wrong, which is why it's so important to listen to what the Fed has to say tomorrow about oil. Man, AMD, I want to see AMD keep testing that 100 level. So it's important to see what the Fed has to say about it. Are they concerned with it? And which you also like, is it that you're bearish because oil's going up? Or is it you're bearish because that actually slows the economy? Or are you bearish because, well, consumers, or are you bearish because it's going to make the Fed hike? If it's the former, maybe you're right. If it's the later, I don't know, because shelter inflation is coming down for the first time consistently. Job growth is falling. Unemployment is rising. So there's much more variables to actually point to the fact that the Fed is done here, right? That they're done. Maybe they do hike in November. Maybe maybe that the market prices that in. We'll see tomorrow what they say. October is going to be huge, right? What does the data look like? But I think it's just going to keep weakening in certain areas. And you get a stock pickers market here. We could just consolidate for another 2 months and then have a rally in November, depending on what the Fed does. Stocks rally by 2:30 drops. What? Stocks rally by 2:30 drops in the AM before Fed meeting. Oh, okay. You think they rally before the Fed meeting? Okay. Well, you're a day trader. All right. Um, I think the bigger probability is that stock. What are we looking at right now? S&P. I haven't been watching intraday. Oh, we had that big recovery. Look, okay. So I see what you're saying. We already had that big slowdown to 440. Look at that buying pressure too, right at 440. Hey, look, double top. If anybody's shorting S&P, very clear double top at major resistance. What is this? 443. You get the double top at prior support for S&P. I mean, I wouldn't short that right now, but you are getting that double top. So this might have been the low. Then 440 might have been in the low. So maybe you're right. 440 might be the low for tomorrow. Going into tomorrow, we'll see how the market ends. If it ends around 443, then I still think we could retest 440. We'll see how it works out. I don't think we really break out. If we do, maybe 444 at the most. I mean, the housing data also shows the housing market is starting to roll over a bit. So I heard that Fed having 50 billion debt. but Fed is hiking? Sorry, I really don't understand what you're saying. I heard that Fed having 50 billion debt. That sentence doesn't really make sense, but Fed is hiking is probably what you're saying. Not sure what you're trying to say there. Quad top Tesla 268, quadruple top for Tesla. Maybe you're right. I mean, yeah, you guys are short. You got some short-term traders here. All right, well, you got the short-term traders. What do you guys want to hear? Got the charts on YouTube. I'll chart it up. Um, what are we in? 50 minutes. Okay, we're in 50 minutes. But yeah, I'm pretty sure the Fed pauses tomorrow. I know Ace is thinks they hike. That'd be huge. If they do hike, I mean, dang, watch for the sell-off. The market's gonna have to reprice on that one for sure. And also look at on a macro level, crude oil is very overbought. It's very overbought. Should have a reversal here. What does it look like on the intraday? Look at that big blow off top early to 92.50. Although the price action or the RSI slope looks like it still looks pretty bullish on the RSI, but it's definitely overbought. Extremely overbought. And the last time we got here was, what did we get to? About a 78, 90? Maybe it pushes a little higher. But you need a real event to push this up. So all this last event, right, 2022, this push up in oil was literally like the stimulus. So stimulus checks, which we're not getting today. What's the best short for oil? I don't know. I mean, the next resistance level I have is right here at 93. 92.50 is what I have. And then above that, you're looking at 100. You're looking at shorting off 100 to short oil, but I wouldn't short oil here, even though I definitely don't want oil to go higher. I wouldn't short it. I think you just have to wait and see what happens with oil. I mean, again, you have Iran, Iraq. There's a couple OPEC countries who are not. They don't have to follow the cut policy, so they're still producing. The U.S. is back to pre-pandemic levels as far as producing oil. So supply is coming online. This might be just a trade, which I'm saying, hey, maybe this is just a trade. It's obviously not systemic. It's not like the U.S. economy at the manufacturing level is starting to revamp up, right? It's not like China is revamping up. They're hanging in there. We're hanging in there, but we're not getting a big burst in economic activity, right? India doesn't, India's getting cheap oil from Iran and somebody else too. So, yeah, I don't know. It could be done. It could just keep going. At this point, you just don't know. When it's this overbought, you could just keep going up. And if it was a spike, I might say, oh, it's bearish, but it's not a spike. It's just trendy. Very, very trendy. This price action is very trendy. Now, if you go to the weekly, it looks like it's almost overbought. We'll see. But again, is it enough to push the Fed over the edge and hike? I don't think so. Nat gas is still down. These are electricity costs still down, right? Wheat cost, right? Everybody eats wheat and bread and pizza and all that. Wheat futures are down, making new lows. I mean, wheat futures haven't been this low since what, forever? I mean, I don't even think this is the lowest wheat futures have ever been after having a monster spike. This spike was the whole Russia invasion, right? Geopolitical risk looking forward didn't happen. You never got that food inflation, hyperinflation the way people thought. Yes, it did inflate, but you didn't get hyperinflation. Copper, I mean, copper might break out eventually, but right now copper it's not showing us anything. The VIX just can't get up. Can't get it up, man. The VIX can't get it up. Volatility VIX trying to get out there. Vol VIX trying to get out there. Move index, bond volatility still low. And this is why I remain pretty bullish here. Let's see. Oh, you're talking about to buy drip? I mean, I don't know, man. I don't like these things. Drip, yeah, the daily bear to short. It could be the 2x bear for oil. People see these and think, oh, it's gonna retrace higher. I don't know. I wouldn't be interested. I'm not advocating to buy none of this. I think you have to wait with oil. I think you just have to wait for some more confirmation. Hopefully I'm wrong. Hopefully it just retraces, but we'll see. It's a lot rides on what the Fed says tomorrow. A lot rides on what the Fed says tomorrow. Um, what do you got? 105. So dang, that was a big move on Chainlink. Tesla holding anchored VWAP here also. Wait, why is this here? This should be here. Okay, we're still good. Crypto strength, huh? Where's the equal weight at? NASDAQ equal weight in. Oh, here it is. NASDAQ equal weight. I wanted to see what this looked like. It looks pretty similar. And then also bonds. We haven't really talked about bonds, but there needs to be a buyer here to get rates down. You need bonds to. These are long bonds though, not shorts. But it's at support. Not too much difference there. See if there's anything else coming in. Pipeline breaking news. I'll go over some of this. And then we'll do a review. Oh, bond yields blasted to 16-year high. Stock sink ahead of Fed. They already recovered though. That was pretty quick. Hedge funds are furiously short semi stocks. Okay. There's a bunch of stuff out there. Nothing really matters except for what the Fed, what happens after tomorrow. So, yeah, let's refresh that. Let's refresh that. Let's refresh that. Right. So, here's what we got. Hey, appreciate the love there, user. We're almost done here though. Always, hey, if you guys want to know what time I come on, just go to the YouTube. I try to set a schedule, but there's just stuff that pops up. There's so much news, so I want to make sure I get it ready in time, or I get it ready. I don't want to give a crappy presentation. So, yeah, I could wake up earlier, but I like my sleep, and I'm still up at night creating some stuff. I'm gonna have some Chainlink stuff pretty soon, some tokenization stuff. I think we get a 10x, 10x coin. I don't want to say it's a guarantee. Obviously, that's false, but this thing can roll. This thing can really move, and I'll show you my positions. I'm going to be revealing my position, my crypto position in Chainlink this week, sometime this week, so you guys can see that. Right. So, I'm not full of shit. I think I can say that. Yeah. So I'm not full of shit. So here's what we got, right? The Fed is probably going to hold tomorrow. I think 99, I don't want to say 9, there's a 90% chance they hold rates. They wait and see. I don't think oil is a big shelter inflation rolling over. That's what they focused on. Shelter is a big deal. It's rolling over, right? The housing market is weakening. We got the data today. Housing starts making new lows, right? Building activity is up because of multifamilies, but housing is rolling over a little bit. And you had a 70% cancellation rate for certain contracts when it came to housing. It continues to weaken. Job growth is falling. Job openings have been falling. More reason for the Fed to pause here. Unemployment just jumped. I think the unemployment keeps going up, right? This UAW strike, who is it? Ford, Stellantis, they had to lay off workers. So you're going to get more layoffs coming in the pipeline. And the rolling recession continues to roll, right? Unemployment goes up, gives them more reason to spike to hold here. The spike in oil, like I said, oil is being driven by supply side dynamics, not necessarily broken supply chains, just, literally controlling the supply. But the more they do it, the weaker you weaken the economy. It's like a tax on the global economy, and it slows growth. Ultimately, it gives more growth to gives better earnings to the energy producers, the oil producers, but it crushes growth overall. It takes from other places. So rolling recession, nothing really changed there. And we'll see most important thing. The most important thing is that we focus on what the Fed says. What do they have to say about that? Right, going in for oil prices. Um, and then let's see. Yeah, I think that's about it. And two, what is the framework here? How are we framing this? Well, always think of first the business cycle, economic activity. Remember this. It is, despite everything, economic activity is turning up. The business cycle is bottoming out. It doesn't mean it turns up tomorrow or next month, but it is making its way, right? It's starting to trough here, and it's making its way past past the even side, past the halfway mark, meaning it's not just starting to bottom, it's been bottoming and it's starting to turn up. That's what I see here in my research. Liquidity also starting to recover, um, driven by the RRP, which, hey, if it runs out, we might have an issue there. But I do expect China to keep printing, Japan to keep printing as deflationary forces take over in the global economy. I think inflation is going to surprise people to the downside in certain segments. The upside surprise in oil is not really a surprise. Um, right? Technicals were still in an uptrend. Rates peaking is going to be huge. The fundamentals are turning up, but remember, if earnings get revised lower, I will report that. That will be a net negative. The S&P will probably reprice, and you're going to get a stock pickers market. And the adoption cycles, those are probably going to keep moving up, right? Tesla, the EV narrative, Nvidia, AMD, the chips narrative, they're getting fueled by fiscal policy. Those probably keep going up because it's an adoption cycle. These things are starting to pick up. They're getting funding they're receiving funding, and people are choosing it from a cyclical basis. Higher oil prices, higher gas prices are going to push people towards EVs. And when EVs are cheaper and they're better performing cars, right? Tesla obviously dominating because they're not all that good. You get the secular shift, right? Also, tokenization, probably the biggest catalyst for crypto that nobody understands. Yes, the ETF is huge. It opens up a big pool of money, but tokenization is literally traditional finance. All the business of money is the biggest business in the world out there, right? It is the biggest business in the world. And when the business of money actually flips, which it never does, and says, okay, we're going to tokenize bonds, we're going to tokenize equities, we're going to tokenize, corporate debt, then you're getting a big shift here. They're tokenizing their assets, so it's cheaper, faster, more efficient for them, and also it opens up the pool for investors. It opens up the pool for people who don't have access to that, which is more money, more capital, more productivity, increases GDP without the inflation, very deflationary. And that tokenization thing is going to be huge. It's just hard to see. It's hard to understand, and people are confused. But this is where the opportunity is. How do you tell when institutions are buying or selling? Go to institutional ownership. I mean, there's a lot of ways you can tell. How do I know? I look at the volume of price, and it depends on what you're talking about, what asset you're talking about. But you look at the volume of price. If you look at institutional ownership of any stock, you can see if it has high or low institutional ownership. If you're talking day trading, just watch VWAP. They're usually, so what do you talk, investing, trading, it really does depend. If you're talking about crypto, when I said, institutions are buying or selling, when it comes to crypto, you can't tell. You could probably tell through on-chain dynamics, but that's a hard game to understand. The most important thing is, are they being adopted? Is the technology that they're presenting, whoever it is that being adopted in traditional finance, right? Is that being and people say, oh, we don't want to trade. It doesn't matter. You're going to get the money. Most of the money that pushes up crypto, people are in it because it goes up, is going to be traditional finance. It's going to be Wall Street. So you can't just discount that. You're going to get Wall Street no matter what. So anyways, yeah, I'll be hosting the Fed meeting tomorrow, a little earlier, obviously. We're going to purely focus on that. And we'll see what the Fed says. How does the market react? How do bond yields react? How does the dollar react? How do the CME futures, right? Fed fund futures, how do those react? And then, watching price action. We're going to dissect Fed Powell's speech, right? What he says, what are the words that he's changing? I'll have that all up to date in the comments. I'm probably just gonna spam the comments with what I think he's saying and the signals. Afterwards, I'll put it into a document, and it'll be in a document, and I'll email it out to those of you who are subscribed already, so you can get through that. So don't forget to subscribe to the YouTube if you don't mind helping me out there with the algorithm, and newsletter also. It's free newsletter every single week. New data comes out. I'll present that to you. So anyways, you guys have a good evening. Fed meeting tomorrow, biggest day. You know, so be prepared for that. Stay blessed. Make sure you guys eat healthy. Make sure you work out today and be the best you possibly can. I don't want to say think positive, but do hard things. Do hard things, do tough things. Stay positive. Life is tough. It's not easy. So just keep grinding out there. All right. Appreciate you guys who joined the live, and I'll catch you tomorrow.